Surprise, surprise, I'm back. Look, I think any stablecoin gathering is not complete without someone from Tether, having a conversation and given the position they have in the industry. So Marco, thank you so much for being here. So I want to kick off a little bit with a little bit around that kind of dominance and distribution theme. And there's Tether processes more stablecoin volume than all other stablecoins combined. Take us back. How did you build that market position? What did the early days look like, and what were the key inflection points that you guys think through as you look back on the history of Tether?
Yeah, thank you, Chris, and it's a pleasure to be here. Actually, it's my first time in South Africa. We have some very good people, Matt, that is in the audience, but my first time, and it's an amazing place. I wish I can come back much more often. So the use cases, and I heard also from Sanya before, and I pretty much agree with her, where, let's say, are different per different markets and changed a lot through the years. So, when Tether was built in the beginning was more about arbitrage opportunity. So like exchanges at that time was mostly, I would say, starting from China. There was a big, massive arbitrage opportunity between exchanges because the price of Bitcoin was growing and the prices were pretty different in different exchanges. Then I would say from 2018, 19, but more even 20, 21, let's say payments, remittances, cross-border payments, trade finance started being a thing, and we could see a percentage of the market cap being part of it, being part of payments, and that was growing quite exponentially in the last few years. So payments were not a big thing before, I would say, 2020 whatsoever. And I think what we realized afterwards, we couldn't understand it in the beginning, was during COVID, a bunch of people all around the world could not go anymore into the local exchanges to exchange currency. So before was mentioned Argentina in the previous presentation. And in Argentina, if you go around the streets, there are the cuevas, and you exchange money in the cuevas with an informal rate, actually, because central banks used to fix the rate, in many countries, let's say. And so just exchanging stable coins peer-to-peer was just an easy way to do it. No, we understood it a little bit later, but that was a big, let's say, driver for retail adoption for stablecoins. So the expansion team and the business development team of Tether, let's say, from those years started really looking into these real-world use cases, and that's why also the number of the user base directly with having USDT is now around, I think, 560 million. Of course, it's a bit difficult to say scientifically, because if you look at exchanges, if you look at, I don't know, blockchains, they say huge numbers. We have an economics team that is checking all these numbers. We think that those real-world use cases are the driver for the adoption of stablecoins, and that's why we always focused where the dollar is needed, in emerging markets. So we didn't have people. I have now one person in Europe in my team, and in the United States, we just launched USAT, the US stablecoin. So now we start hiring a little bit, but every person of my team is a citizen of these emerging economies in different parts of the world. Yeah.
Wow. So it sounds like that playbook you used was really local first, on the ground, BD and getting Tether into the is that been kind of the playbook that's kept you ahead? Is that local first mentality?
Yeah, it's let's say we say always hyper localization, because whenever we have a debate internally or also with external partners, you say okay, how you can push more a blockchain? Someone from the blockchain says how you can push a blockchain instead of another one? There is a massive exposure on Ethereum and Tron, for example, no? And when you think about it, eventually you have to go in detail on how the flows work, and then at the end of the day, you understand that why whatever exchange, Binance, Bybit, Kraken, and so on are rebalancing the amount of stable coins into a specific blockchain, Tron, just because there is the demand of Tron. And how this is driven is there are many flows now. We cannot speak deeply about that, but you look at that there is probably like an OTC or a regional exchange, and these regional exchange and these OTC are taking liquidities from these big exchanges that are taking liquidity from the market makers that are taking liquidity from the issuers, basically. No? So then if you want to change the habits, let's say, you need to work on the people. Who is sending the invoice in USDT on Tron is maybe the local OTC. And why? Because the guy asked to have it on Tron, for example. No? So if you don't understand deeply the behavior of the retail users and the demand, so you cannot like say just, okay, let's pay incentive to someone and you expect that the flows are going to change. This is not. So always what we focus is really to understand each market really deeply, how the monies are moving like in this market, and how, if we want to try to influence the habits, how we can do it.
Yeah, no, it's definitely been a successful playbook, that's for sure. I think, we chatted a little bit about regulation. We spoke a little bit about MiCA versus Genius Act, and I mean, Tether's at a unique position, quite thoroughly assessing both regimes and then deciding against MiCA. But then going into the US and issuing USAT recently in partnership with Anchorage. How did you make that assessment? And then also, why did you not in the US just try to get USDT regulated versus issuing a new Genius compliant stablecoin? Maybe just talk us through a little bit about that thing.
Yeah, definitely. So we have been very, let's say, vocal about regulation and about MiCA. It's not that we decided to not apply because we believe that we couldn't get a license. Is because how the framework is built is wrong, in our opinion. And we have been speaking very directly about that. I had many conversations. I'm not part of the regulatory team, but I anyway had many conversations with the guys that designed MiCA, the guy that is called the father of MiCA. I had lunches with him and so on. And actually, he couldn't counter-argue my points. As, for example, you need to have 60% of cash reserves, basically, which are probably distributed in many, I think at least 12 banks would be for us. So the banks that bank a company like Tether, because of the history as well of Tether and the regulatory environment and so on, are not like a UBS or whatever. No, are small banks, so you're even more subject to risk of these banks, of their balance sheet. Then the banks operate in a fractional reserve system, depending on, okay, in Europe there is a ratio, in other countries there are other ratios, and we saw in the past that this poses a risk, right? So we cannot be sure if we need to redeem 100% of what we issued there, that the bank cannot give us back the money. And if you have fractional reserve, it can be the case. So we just wanted to, let's say, try to create a basket of securities, for example, no, of different T-bills from different countries. But actually, there was an intent to preserve and to protect the banking system quite a lot. So, and the reality is that the dollar, in our opinion, or maybe I can say my opinion, is not needed in Europe. Like the first time I saw a US dollar bill was when I was 20 years old. I'm Italian. It was when I was 20 years old. Like there are no circulating US dollars in Europe. Okay, then you can claim like for trading, for commodities, whatever. Yes, but as you mentioned also in the previous speech, you have instant payment systems, you have SEPA. I mean, you can still optimize, but the level of optimization that you can do is not that massive compared to a country where, they don't care if you provide them the 4% of yield because the currency is devaluating 40%, So for us, it's like what we prioritize. Also, we are not a huge team, and so let's focus where the dollar is needed, where there are like bigger issues. And that's not Europe, and it's not the United States for us. There are use cases there, yes, but I think the use cases that we see in emerging markets are much higher.
Oh. And that thinking through USAT, launching that in the US versus trying to take traditional Tether into the US and getting it regulated. What was the thought process there?
No, so the thing is that it's not that Tether doesn't want to be Genius compliant. It just, if you look at the Genius Act, the reality is that in order to be compliant to the Genius Act, it will take another at least 2.5 years, plus the Treasury has to provide the guidelines, so it will take 3-4 years, probably, I think. So then what's happening is that if you focus on the US market, of course, you should be, let's say, regulated there, and you should be creating your legal entities and structure there. But the use case of USDT is, and how the business model is built is pretty different, let's say. So what's going to happen also with the Genius Act is that there will be a reciprocity. So there will be some countries that will have like a regulation very close to the Genius Act one. So the issuers can issue also from these countries. So probably this could be a path that Tether will seek, and actually we are already working on that quite hard. USAT is another animal. Tether doesn't onboard US companies, for example. So it's not that we didn't enter the US market, like that we're not able to do business development in the US. We just don't onboard US companies. We don't onboard European companies. You know, we exclude this. So USAT can do this. And by the way, the issuer is not Tether, but is Anchorage. And so we can support. But the reality is that if you look at the flows of stablecoins, when you go, let's say that you go to the Philippines, you go to CoinsPH, you go to PDAX or whatever other country, at the end of the day, you care, again, about what the end user wants to have in his wallet. If they want USDT, then if the transaction is originating in any other stablecoin, it's going to be converted in USDT, you know, because they just know what's that for many reasons. So when it comes to USDT, I think can originate a lot of transactions coming from the United States, can basically become like an interesting stable coin for the local market, for sure, for payments, for all the institutional use cases. When it comes to the emerging markets, my opinion is very difficult to beat the liquidity that current stablecoins have already. I mean, to build that stuff, it's quite hard. If I always say, running the business development of Tether, I always saying, if I had to do a startup, I would never do a stablecoin. Like.
Okay, look, I think that's a good segue because you mentioned earlier, you know, you're a small team and there's a lot of headline numbers that go in, but you know, Tether's become one of the most profitable financial institutions in the world on a per head count basis. But you know, you see all the media kind of metrics and they focus on that. What does Tether focus on internally? What are the key KPIs that you guys think about internally? You know, what is on that dashboard that you guys look at on a weekly basis?
Yeah. So the reality is that Tether, of course, is known for USDT, but we are developing a bunch of products and in different sectors. So I think one of the most, let's say, biggest topic where we are putting resources is decentralized AI. So we have a system called QVAC that is being launched, basically. But then we have a lot of other products. We have wallet development kit to create wallets. We are helping companies to create a bunch of wallets. We have Hadron to tokenize, basically, securities, commodities, creating stablecoins. So we have a lot of products. And when you have a lot of products that are actually, let's say, pieces of bigger vision that we have, so with USDT, we solve a little bit the problem of money. Actually, we don't solve it as much as with Bitcoin, but it's still like people want, you know, still like fiat, like stablecoins back to fiat at the moment. But we are building up all the other decentralized stuff when it comes to AI, when it comes to telecommunication, and so on. Then, when you create some products like this, like one very important KPI for you is the user base, because your users then can work on and can adopt products in all your ecosystem because they trust you. So they already hold Tether, so they will hold maybe, like they will use like your communication app, then they will use your decentralized AI application, and so on. So I think user base is probably the most important parameter that we have, at least on the business development side. Of course, market cap is not really super important for us, generally speaking, because is it more important like having 1,000 people doing a $1 transaction or having like one guy doing 100 million transaction? that 100 million transaction is not sticky. Like it can go away. It can be redeemed pretty fast if there is a shock in the market. Like that can be a redemption. But if you have like $1 like for 1,000 transaction, 100,000 transaction, 1 million, that's much more important for us.
Yeah.
Just high-level answer, let's say.
Yeah. But I mean, I think if we, you mentioned the redemptions. I think you guys have, if correct me if I'm wrong, but one of the largest buyers of gold over 2025, and you've added that into your reserve mix. I mean, there's obviously a lot of, you've got Bitcoin in there, you've got T-bills in there. How's the treasury team been thinking about that reserve mix? Why so much gold? Why so much Bitcoin? What's the thinking around that?
Yeah. So to be completely honest, I think it's the vision of let's say the main owner and founder of Tether that is really spot on. It's not like a lot of financial analysts or whatever. And he was right again. Like when he started like 2017 and then like accumulating gold. And now Tether has, I think around, the number is changing every day, but I think 140 tons of gold. The current price probably would be around 25 billion or something like that. XAUT is even more important for us than USDT at the moment, Tether Gold. Tether Gold is basically, XAUT is pegged to the value of 1 ounce of gold and is backed by physical gold held in Switzerland. Switzerland probably is the country in the world, if you have to think about one where private property is, most valued, probably. And we are seeing an increase of user base on XAUT crazy in the last weeks, in the last months. The market cap is still, I would say, 3.7 billion, so it's not comparable to USDT. But if you have to think about that until 2020, if you look at the chart of USDT, it was like this until 2020, then like this, then a little bit like this with Luna, Terra, FTX, and so on, and then like this. So it takes years to create the liquidity, to have all the venues understanding what is a new product. So I think that's really important move both for the retail side and for the institutional side. We are seeing like ETF gold being converted in tokenized gold. We are seeing a treasury, the company with treasuries that are converting into gold, tokenized gold. We are seeing like a digital asset treasury strategy around gold to generate yield on gold and many more things. So I think in the next 2-3 years, this will be very important for us.
And I think, Tether was founded in a zero interest rate environment. So for many years, it was Tether market cap was going up, but there was very little income being generated off those reserves. That's obviously shifted over the last few years, and we've seen the numbers we spoke about earlier. How do you think, and what needs to change in Tether's business model if we go back to a zero interest rate environment? How are you guys planning for that and thinking through that at the Tether level?
Yeah. So yes, some years ago, indeed, it was like we forget about these things. No, like now there is interest rate and so on. No, that's why we have been very, let's say, maybe companies or people feel stingy, on not sharing the yield. But there are many reasons for which we do that, and the business model of stablecoins will not work anymore if there is no like reserve management that allows to generate like some revenue. Because if you look at the income statement of stablecoins, you have like revenues from yield or whatever you have as an asset in the reserves. Then you have the fees, but the fees are nothing, negligible. So the revenue composition is basically really minimal of the fees. And then the regulation was much more, let's say, gray and uncertain, and there were different strategies. There were like proper investment managers asset managers that were deciding how to invest. There were no guidelines whatsoever. And now, at least what you need to have is a bit of flexibility, basically. Because if they tell you, if you go to a country, you go to Japan or you go wherever, and they tell you like, okay, 50% cash reserves, okay, then we have to hold the cash reserve there. For a stable coin, it's very dangerous as well. When you work in emerging markets, you may be also subject to corruption, of course, or these kind of things. So you never want, because a guy woke up in the morning and wanted to make 100 million more, that is calling you and say like, I'm going to freeze your money in the bank account here, and so. So you have to have. That's why you have to have securities. You have to have a more sovereign kind of asset base to do that. So the composition of the reserve of Tether, I believe, will remain really pretty straightforward as it is now. Like, let's say last attestation, we had 186.5 billion in market cap. We had 192.8 billion in total assets. So we had 6.3 billion in excess reserves. And then if you look, we have around 142 billion in T-bills, direct and indirect exposures, like also repurchase agreements and so on. And so we are one of the largest holder of, I think, I don't know, 16th, 17th of T-bills, 90 days the first. And then we had 18 billion in gold, 8 billion point something in Bitcoin, and then we had some secure loans, which is like over collateralized usually, like probably BVNK also. I don't know if you're part of that. So I think the composition will remain that until Genius Act will come into place, or will be similar or rebalanced and so on. And then Genius Act is quite flexible anyway, so we will see, the Treasury team will see like which tool we can use at that specific moment in time. But now, even if the T-bills rate will go down, we have like some strategies to cover that gap. Okay. And by the way, in the meantime, as I was mentioning with the other products, we are building up like a lot of different revenue streams.
Yeah, and that's exactly what I'm talking about. We spoke a bit about you. You're launching a Tether wallet, so you've been expanding in emerging markets, building the team out here, getting closer to that user base, obviously getting great user insights from them, and that's obviously driving your product strategy. Maybe you can chat us through a little bit about that vision and that that product strategy away from just the issuance of USDT.
Yeah. So if you So wallet development kit is a SDK that allows companies to build up a wallet, and is predominantly like a non-custodial wallet. We kind of always suggest to develop a non-custodial wallet. Nowadays, the user experience, you can do it pretty well. Also, when it comes to non-custodial, it's not like a couple of years ago. Like, you cannot have like a MetaMask for my parents, like with 1,000 chains and gas fees and tokens that you have to hold and so on. But nowadays, you can solve all these problems, and is really about like how you build up for companies a wallet that is retail, but is also helping them to manage their own infrastructure. So if they have to pay merchants or B2B players that are in the platform, for example, they have a system which could be non-custodial or custodial in certain cases if they want to seek for a license. So I think we are going to achieve in the next 18 months probably at least 150 million users plus just with this wallet system that we are creating, both our own wallets. If you see the web messaging app that we have, Keet, K-E-E-T, that's like a fully peer-to-peer messaging app that is built on similar technology of BitTorrent. So it's like it's called hole punching technology that we redesigned kind of from scratch for telecommunication instead of storage. So there will be a wallet there. There are already millions of users there. There are wallets basically all in all our products, and also it's not like in 10 years that we are going to see real cases of agentic payments. So we are working on technologies also for that.
Okay. I think, final question, as we come up on time is, if you zoom out and you say, what does the stablecoin market look like in 3 to 5 years? We've obviously seen this proliferation of, branded stablecoins. You've got fierce competition from other large stablecoins. Where do you think Tether fits in? Do you think that market dominance remains, top 2 to 3 players, and what do you think about these hundreds of branded stablecoins that look like they're going to be coming to market quite soon?
Yeah. So there are many experiments from companies, governments about local stablecoins, and local stablecoins probably are not really useful. I was talking also with some people yesterday about this, like for domestic payments. But for cross-border payments, are quite useful to do on-chain FX, on-chain transaction, and immediate settlement. And nowadays, like all the countries want to be a little bit more sovereign, right? They don't want to have like external players dictating their games. So I think this is like something that I'm seeing overall in the world, that we are going towards that direction. So the on-off ramp game, I think, can be bypassed. not really is not really far to bypass that. And so you could go directly to do on-chain settlements. I think every one of us is working on that direction. No? So then the question that I don't answer, but every one of us has to ask is like also, what do we think about the US dollar in terms of like projection in 5-10 years, if you're thinking about 10 years? And I think that the medium of exchange, whatever it is, I mean, people don't see how a transaction is made in the middle now. How BVNK is making a transaction, you're like obfuscating that, no? So can be really easy to replace transaction in, for example, Tether Gold in the middle. Then a guy can receive whatever fiat currency or whatever, you know, digital money on the blockchain. I mean, you don't know what are digital money, no, if you're just spending, you basically, you know, like as a user. So, okay, maybe it's on a blockchain. What's the difference? No, you don't see that technology behind. So I believe that with the current geopolitical setting that there is all around the world, many countries want to be much less exposed to fiat money, and Bitcoin is a very good solution, but still takes some time for especially like decision makers of 70 plus to understand. And I think gold everyone understands, so I would see a world where transaction can be as a medium of exchange can be run by gold. We also created a product which is still really in the background, which is called Alloy by Tether. Is a USDT, is a dollar-pegged stablecoin backed by over-collateralized gold position. So basically, you mint XAUT, you put it as collateral, you then you buy or mint the XAUT, then you put it as collateral, then you have a USDT. So, I mean, can be a USDT, can be anything, but you can be like a local currency. It can be ZAR, whatever runs. But behind gold is in the backing. So we go back to the gold standard, basically.
Back to the gold standard. So we'll end it there. Thanks so much, Marco, for
Thank you very much.
being with us.
Thank you.